Welcome.
All right. Welcome.
Welcome.
Oh, I'm going to get my water, but welcome.
Oh, get your water. Hi, everybody. We are recording
Little
this
Oak.
at almost 5 p.m.
Yeah.
We don't normally do that.
We do not.
Normally we do this in the morning or
Much
maybe
earlier.
early afternoon. So Justin and I are both struggling for energy right now.
We got it.
We may have put some substances in our body.
Whatever works, man. Whatever works.
To get energy.
Yep. We're here.
But here we go.
Mm-hmm.
You're going to really like that noise in the
I'm
editing.
going to love it. Yep.
Gonna
I'm going to shake everything. That's why I can't put a camera or anything on the table because you,
I'll
you
bump
move
it.
a lot. Yep.
I move too much. Well, so we have when's the last time we did an episode? A week
2
and a
weeks
half?
ago.
Is it 2 weeks ago? Okay, so much has transpired. We have President Trump.
But we don't. But
Well, we do. The world
Sure,
does.
the world does.
You know what? Actually,
is there a transition right
I would
away?
say that we don't, but that you would think that you can't defend that because the world has responded
Sure.
in such a way where that you would think that he's the president of everybody. I mean, it's the leader of the free world, the most powerful country in the world, and our number one trading partner. And
Yep.
so it's a big deal.
I think, well, it's a bigger deal because it's him. Like he's a polarized guy.
Oh, 100%. It's, make no mistake, there is, the reaction is large because of the human we're talking
Sure.
about. But I'll tell you something that it was shocking to me. So twice I've seen, we should probably give a disclaimer that I might anger some people in this episode. I'll
This
try not
episode?
to. Yeah, right. All the episodes. I've seen twice now, Brendan Augmanson, our BCREA economist, give his outlook on the future as he does every year. And Brendan, I can be quoted as saying many times, of all the economists that are in our
Smart guy.
lives, I like him a lot.
Yep.
I like the way he thinks through things. I think that you could actually point to a lot of his predictions in the past and say that's relatively
He's pretty good at it.
accurate.
Yep.
He spent, so in two presentations I saw, which were let's call them 60 minutes, I would say a quarter of his presentation, which is a BCREA economic report and prediction for the coming year, he spent a quarter of his time talking about how, in his view, Trump was going to make all of our lives difficult for 2025 moving forward.
Mhm.
Now,
I sat through one of them.
oh yeah, you did sit through one of them. Yeah, that's right. I forgot that we were. So, there's two things to talk about here besides the fact that I would totally love to argue with him on some of his analysis and how he draws his conclusions. We all know that if we did that publicly, he'd probably talk circles around me because this is what he does.
Yeah,
So there's no
numbers are his thing.
there's no point in doing that. But the other piece, which I probably think is even more worthwhile talking about in this context of him giving a report to a bunch of Fraser Valley real estate board members, is why are we spending 25% of our economic outlook for 2025 in British Columbia and in the Fraser Valley talking about Trump? It makes no sense. Never before I know you're going to say it makes sense because he's so polarizing, but it's ridiculous.
I do agree with you. Well, it was too long. It was too much time spent on it. But also I think maybe it's just because that's what he does. He's a forecaster. It's too much unknown stuff that they're using as, a lot of his stuff was this could happen.
So now I can't remember because I saw him twice and I can't remember.
You saw him two times?
I saw him the very next day after you and I saw him because I was at another meeting.
Oh, wow.
And so I saw the exact
Same presentation.
It's identical.
Oof.
It's identical. And,
It was too long.
And actually, you
Good
want to know?
stuff, but-
Do you want to know? There was somebody. I was with another group, and in that second day, there was also some people in the room who just lap up everything he says, and then there were some people who had a real issue with some of the things that he said because he wavered from in my opinion, he wavered from analyzing data to drawing political lines and giving opinions, not analyzing data. Just I think this is bad because of this guy's a moron.
I think when he did his presentation and he talked specifically about tariffs and the what ifs and that forecast, that was a fair forecast to me.
Right. But he made a lot of other statements.
Yeah, there were other stuff.
Other than
but I'm
tariffs.
just saying, like, if you're focusing on specific things that could affect the Canadian economy, that I got like I actually really liked that chart. It showed like, here's what could look like with tariffs. Here's what could look with the counter tariffs. That to me was like, okay, that's at least something that's analytical. But I agree. Some of it's
so
I knew my drive home with you and Ray was going to be interesting as soon as he started.
We didn't really like. I took time to process it and think through about what he projected. And then what we have the luxury of now over the days even following is the world and the Canadian market responded instantaneously to the Trump win.
Mm-hmm.
And then in the 3 days of this quick market response globally and locally, I would say that the people who were anti-Trump that didn't want to see a Trump victory grabbed onto the response in the immediate aftermath in the market and said, see, look at this. This is bad for us moving forward. Mm-hmm. And they, point to things like tariffs and continue to point out the flaws that he may have in his character, which he does have.
Sure.
We all have.
Yeah.
But then what's happened in the days following, now that we're like, a couple weeks into this, is the rhetoric about tariffs, at least to this point, is just rhetoric. Like he's just talking, saying we're going to do this and do that and do that. Pierre Poilievre gave an interesting quote.
I thought I missed it, but I did hear him talking about it.
I loved his quote. So, the media in Canada nailed him down and said, what do you think about this? Like, this is a big problem. And Poilievre looks right in the camera and goes, Donald Trump has every right to defend the interests and the specifically the trade interests of his country as he should. And it's something that our prime minister has not been doing a very good job of for a long time. So as the leader or the potential leader of Canada, I'm not going to make a statement and say, how dare Trump do this? If Trump is going to do something like this, then what we need is a strong and respected leader in our country to properly deal with our key trading partner, i.e. the United States. It was a beautiful response because they wanted to try to, some of the media in Canada wants to just paint Poilievre like Trump 0.2, right? Which he's not at all. And I think he gave an eloquent, intelligent response. And it is Trump's job to look out for the trade interests of the US. And that could potentially maybe create some challenges for Canada. But if we have good leadership in Canada, as we have in many years gone by, we'll figure it out, and we'll figure out how to make our economies work well together, because that's what good leadership does.
It will end up fine in the end.
This is the point. I didn't want to talk about Trump today. This is the point of what I wanted to get to is that. So the immediate aftermath, markets went wild, bond yields went wild, interest rates went wild. And then everyone goes, see, look at how negative it is. Now, actually, as days go on, things are rebalancing. There was talk of fixed rates going up because bond yields went up.
Yep.
And I think we even are seeing a 0.15 with some of the lenders respond to the increased bond yields that occurred.
Does the bond yield affect the fixed instantly?
Well, almost instantly, like because it's the lending rates that are fixed are attached directly to various bond rates. But now in the last 24 hours, Canadian bond yields have dropped again. They've gone back down because the underlying metrics in our economy right now are not good. We do not have a strong economy. And so the world reacted when Trump won because Trump is deemed to be more inflationary in his policies because he wants economies to boom. And so when economies boom, bond rates go up. But the rhetoric is not so powerful to be able to reverse what is in fact underlying, particularly in our Canadian economy, in that we are not strong. We are in a recession.
Yeah.
Even our GDP, like the GDP, which is, hovering around a couple percent right now, the vast majority of all of our growth in the last year is government spending. It's not like people like me and you are going out and like expanding business and hiring more workers and pouring money in the economy. All the money that's been poured into the Canadian economy is government money. It's our tax dollars. That's not a real measure of what's happening in the free market. It's an improper it's tricking us into thinking that we are doing better than we are. And people know this. Economists know this. People who are intelligent, who dissect these things can see like, we're at a balance. If we have a GDP of 2 and 180 basis points of that is government spending, what's going on in the free enterprise market that we're virtually doing nothing.
Right. And
that is still what is lying beneath the sheets per se within our country and even within the US. The US's growth is largely and has been largely impacted by government spending in the last 2 years. And so that's a problem, and we need to free up the free market in both economies. And doing so can potentially be inflationary, but if done properly along with growth of business, growth in private sector, job creation, freeing up things like oil and gas, these things can grow together. The problem is when you have inflation grow, but all the workers stay the same. Everyone makes the same amount of money and there's not new jobs. That's an issue, right? When you get a separation of those two things. And that is what we've had. We've had inflationary, patterns in the country, but we haven't had growth in wages and growth in jobs and things of that nature. So, complex issues. These are complex issues. But the reason it's important to talk about is because the messaging from our very own, the Brendan Augmensons of the world and others are now spreading the information amongst our media sources that this is in fact what's going on. So if that's happening, then as salespeople in the real estate industry, we have to be prepared to talk about these things. If we don't have the information and then formulate our own opinions to be able to help our clients navigate these circumstances, we know what happens. People just are stuck. They do nothing. They sit still. And when they sit still, they don't transact. And when they don't transact, they miss out on opportunities. And we miss out on opportunities, right? We miss out on sales that otherwise could occur if we had the ability to talk through these complex issues.
Have you been in that situation? Are you actually having that conversation with people yet? Absolutely.
I mean, I'm going to deal with throat issues here again, apparently, at the end of the day after talking so much. I just listed a place yesterday. It's going to market now. It's just a little condo. And those people, we were waiting. It was ready to go for the past few weeks. And, they were staging it and doing some things or whatever. But one of the things that we were waiting for is we were trying to make sense of all of these issues, right? Like, what does this mean? Is the property going to be worth substantially more money in March? Let's say if we were to wait till March. And it's not like we had to arrive at a conclusion where I needed to be able to say to them, it's going to be worth this much today and that much in March. It's more like we needed to dialogue and allow them to hear from me on some of these issues so that they could ultimately feel like they're making an informed decision. And their decision was, we're going to go to market now, not wait until the new year or spring, where it could very well be worth more then. But when we factored in the cost benefit of like, okay, let's pretend today we think it's worth $550, and what's a best case scenario that our modeling would suggest for March or April? What we plugged in is we thought, it could bump 5 points. 5 points is 25 to 30 grand. That's a best case in terms of our consensus conversation. Others could argue that it could be more, but that's kind of what we thought. And so in light of that, they said, you know what, waiting that time, there's a cost to that, obviously, and carrying the property, not worth it to us. Let's go to market now. So the way that conversation transpired, it's not like I had to come with them and sell them on something. But I did need to be able to talk through these issues and have an opinion literally about the Trump win and about economic forecasts in light of Trump and talk about, well, what is this trade stuff? What does it mean for inflation? Like, you have to wrestle with it and form an opinion, not for the purpose of talking everyone into the way you're thinking, but so that you're showing other people how to wrestle with it so that they can arrive at a decision that they feel good about. Does that make sense?
Yeah. Yep.
So I don't know how we went down that rabbit hole. That was, whatever. There's all of these things, right? Oh, when we started, I said, oh, there's a lot that's happened. And so, obviously the Trump victory, and then back to the bond rates for a second. So, bond rates reacted, the bond yields went up in Canada. And now actually in the last 24-hour cycle, they've come back down. And so the next, I think, big thing we have in front of us is, I think it's December 11 is the next Bank of Canada announcement date.
Yep.
And now, like 2 weeks ago, when we last talked here, I think we probably said, as many others were, we're coming down another 50 basis points in December. And now there's been some questions about, are we going to go 50 or only go to 25 in light of all these things?
Yep.
And so I think between now and December 11, we're going to see that swing back and forth still all the way between now and then. Because if anything, what we've learned is, because of the fact that information moves instantly and markets react instantly, there's going to be more developments between now and then that can create a case for a 50-point drop or a 25-point drop. And I don't know where it's going to land. I think what I believe and what I think is the right thing is that, the underlying indicators, economically speaking, are that we're in a recession and we need a rate drop. And I would suggest that we need a 50-point rate drop, not because we benefit from it as realtors, but because we need that economically speaking. I don't know how the Bank of Canada is going to interpret these things, and maybe they'll only go 25 points.
That was actually one part of Brendan's presentation that I found interesting, just because I don't really pay attention to all the number type stuff for that stuff, but just understanding all the things that actually go into that decision, like the things that they're checking. And I think one of the things that was interesting was the how unemployment rate plays a part in it.
Absolutely. Like when we were very inflationary over, 21 and, started in 20 and then 21 and then 22. And then throughout 22 is, they started to jam the rates down, but inflation had already taken off and it was still going up for a while. When you're trying to get control of inflation, one of the things you're doing, without saying it like this, is you're trying to increase unemployment. Now, they would never go to the microphone and if the prime minister would ever say that, like, wait, what do you mean? What do you mean? Well, what we mean is, when unemployment is at 1% or 2%, what that means is the job market is not competitive enough. And that's bad. You need to have unemployment higher. Otherwise, one of the things that was occurring is wage growth was going through the roof in 21 and 22. And what happens when wage growth goes through the roof? Well, the business owner who now has to take a person from $27 an hour and just to keep them, pay them $36 an hour. Yeah. Well, what do they do with that? They go to the price of whatever they're selling and they pass it on to the consumer. Yeah. Because they can't run a business at a loss.
Money doesn't come to nowhere.
So it all eventually just trickles back down to the consumer. And so one of the ways to get control of inflation at the root is to deal with it at the employment rate level. I noticed through that season of 21 and 22, whenever the Bank of Canada was at the mic or Trudeau would talk about it, nobody would ever come out and say, we need 70,000 Canadians to be unemployed tomorrow. Because there's a math that you could do on the percentage and say, this is what this means. But that in fact is what it is. We did not have enough people unemployed in the country to create a more balanced job market. And that's just that's the rude way of saying it, but that is what it is.
Guess we'll see.
I thought there was one more thing we wanted to cover in that. Oh yeah. So interest rates. So this is the other piece to the, how do you handle these conversations right now? I jumped on a quick call today with Kelly Mann, as I like to do sometimes when I'm, about to talk about mortgages. I like to get the latest and greatest. And so, fixed rates some lenders bumped their fixed rates slightly in the past week in light of the fact that bond yields went up.
What's a bump when you say how much are we
0.1 and to 0.15?
Okay. Yeah.
So we're talking minuscule. A mortgage that someone was getting at 4.5, it's now 4.6.
Sure.
So it was tiny.
Yep.
But even that, so now this is I would say this is hot off the press. We haven't seen this yet, but now that bond yields have dropped again, they basically course corrected what they did in the immediate aftermath of the Trump victory. It's not entirely out of the question that a week or two from now, we're talking about rates going back down again.
Mm-hmm.
So, everything in the world, in the market, everything responds so quickly that we're on this roller coaster of emotions up and down, and we have to be cautious not to draw long-term conclusions based on short-term reactions to things that are largely emotional and not based in key indicators.
Right.
And so I would suggest, and I don't think anyone would argue with this, is that the key measurables have not changed. We are in a recessionary market in Canada. And I think in light of that, rates are going to continue. The variable rate market's going to continue to come down. Bank of Canada is going to continue to move rates down. They might change the pace at which they were planning to do that, but they're going down, and they're going to find their way all the way down. The Bank of Canada key lending rate, which I think today is at 3.75. What's deemed to be the target rate is about 2.75 or somewhere in that neighborhood. They're going to find their way to that point. Yeah. Whether they get there in the next 2 announcements or they take 4 or 5 announcements to get there, it does make a difference, because that could mean are we there in February or are we there in next June? But that is, historically speaking, where they need to get to in order to be at what's considered the flat line spot where you're neutral, right? And so they're going to go there. There's no indication for any reason, economically speaking, that they wouldn't be on their way there. The pace at which they go, obviously they might change that. So in the short term, we've gotten to a place where, insured mortgages with 10% down, those people can land a mortgage somewhere in the range of 4.5%. And then variable mortgages are somewhere closer to 5%. We've been there for a little while now, and we're probably going to be there or slightly lower as we work our way into the new year I'm not saying that's my prediction. I think that's the prediction of a lot of people, but that's what I am believing to be true at this point in time.
Cool.
So why does that matter though? Why does it matter that we talk about these things?
Tell me, why does it matter?
I will after I
take your drink.
Lube my throat.
Let me take a longer time to ask the question then.
Yep.
So why?
I thought you were going to go on a diatribe.
Well, I think more useful than just why is how you're using that information when you're talking to people.
So, I kind of gave a little bit of a story there about that condo, and I think, there's a couple different ways to use that information. There is definitely.
Just before you get into it, then, is your conversation different with buyers and sellers? Because I would imagine it is somewhat.
Yeah. And it depends on what a person is selling and what they're trying to go to. This is actually a good segue into the business planning section. So we'll go to that. Cool. We'll go to that next. But so I had another conversation with a person, it was actually this morning, where they were one of those, although it was against my judgment, I sold their place in what we predicted, what they hoped was the peak of the market. They were cashing out of the market. And this was their only property, principal residence. And they were like, we're going to go rent. We're going to wait and see how things go. And we're going to re-enter at a time that makes sense for our family. This is now going back.
Is that a financial decision? Like what would be?
I mean, you got to remember there's all types of belief.
It's not like the rental market's soft. So
no,
like,
but they did get a good rental.
Okay.
They had it was a unique situation. So
Sure.
for their circumstances, was it my advice to do that at that point in time? No. I was concerned that in doing that, they were going to end up regretting it because the market can take off on you. As it turns out, from the time they sold to where we are now, values are basically the same.
Right.
It's, we kind of they looked like heroes for a period of time.
Sure.
Then things bounced back up a little bit. They haven't lost or gained. The bottom line is what they sold wasn't working for their family function anymore. Sure. They've been renting a place that functions much better for them, but they do want to re-enter the market. So the question they're asking from a buyer perspective is, well, should we buy today? Or do we stand to gain something significant by waiting until next summer or something like that, right?
Is the hope when you say their hope to gain is that prices come down or that the lending's better?
Well, these things don't happen in a vacuum. And this is exactly what I explained to them in the conversation today. And we've had this conversation before, so it's not like I had to teach them from point zero, but prices don't move in a vacuum. If prices go up, it's one of two reasons. Either we've had a sudden decrease in supply, which can happen in this market, like where we live in the world, or it's a combination of that and the cost of lending changes. And we witnessed that firsthand through 2020 and 2021. Like, our market lit on fire because typical cost of borrowing dropped in half. Mm-hmm. And so people make decisions based on monthly payments. And if if yesterday the monthly payment you could afford got you $1 million home and tomorrow it got you $1.5 million home, well, guess what? You're buying $1.5 million home, right? Mm-hmm. And so there's not going to be a circumstance for anyone, let alone these people, where, it's my phone ringing. Got to turn that off. There's not going to be a circumstance where if prices drop dramatically, let's say, between now and July, I'm wrong and prices come down another 15%. Well, there's going to be a reason for that. It's going to be because cost of lending has gone up, combined with maybe economically we're in worse spot than we thought we were going to be in. But it doesn't just happen alone. There's a yin and a yang, right? And then if that happens, so let's say prices do drop dramatically by next summer. Well, it's going to be because the cost of borrowing is probably up. And then have you gained anything? Because sure, you might buy the place for 150 grand less, but what does the monthly mortgage look like if the lending's gone up? It might be the same, right? This is the game we've been playing as agents and consumers for the last 2 or 3 years. And as it turns out, it's not always equal. There are times where you go like, ooh, that was really good timing because we got to take advantage of the price correction, yet we still got yesterday's rate.
Right.
And so it worked out better. But there's also an equal amount of stories where the timing was wrong.
Yep.
And you didn't get the best of both worlds. So I find that so here was my exact comment to them in this particular conversation was that, they played their hand, right? They sold at the peak, they cashed out. Now they know that sometime in the next year, they must move. Like they are going to have to get out of this rental and they need to lock down the family home that's going to be their home for the next 10 years. And we have a picture of what that looks like, right? We know what we're hunting for. We played the hand. It hasn't backfired on them. It didn't quite get them the win they wanted. Now it's, well, do you want to buy in an environment where you have choice and you don't have to make a panicked decision, or not? Because what that's like. Like they knew what that other environment was like, where it was hard to find something and you were competing. They didn't feel comfortable in that situation. So I said to them, because you know your path and you have a picture of your life for the next 10 years, buy when the right home appears. If that's tomorrow, buy it. If that takes us 4 months to find it, fine, but buy it. Because I don't believe there's an argument that can be made that we're going to be dramatically down or dramatically up in the next 12 months. So if that's true, then what are we waiting for? The most important thing is that you want to have the right family home that fits your family needs. And we know that that doesn't just appear every week.
Yep.
Because we're looking for something specific. So when we see it, let's not hesitate and let's just grab it. And I think that resonated with them. And so that's likely, you know, what we're gonna land on. That's from the perspective of a buyer.
Mm-hmm.
From the perspective of a seller, there's variables like, is the seller trying to downsize into something, or is the seller just cashing out? The objections that sellers have had in transacting over the course of the last year can be, well, I want to cash out, but I don't like the cash out number because I liked it better when it was a few $100,000 up, right? And like if you're a person that was trying to cash out and go to Alberta or what, like there was a lot of that for a period of time. Another common one was the downsizer, right? Like they wanted to go from house to a townhouse. And in 2021, the spread of the value between those two properties was much more significant than it is today, because in these types of markets, everything condenses. So there's less justification for that seller to do the move today because they don't see as big of a cash windfall, right? Mm-hmm. But with that conversation, again, not that I think it's the right time for everyone to transact, but I think the person who has that objection in their mind needs to be reminded of a couple things. One thing they need to be reminded of is that, hey, we were in that environment 3 years ago. And remember, the reason that you didn't downsize then was because you loved the cash windfall that you were staring at, but you literally couldn't get the place that you wanted. Right. So that's the other extreme, right? Mm-hmm. Some of these people couldn't successfully transact in 2021 because they physically couldn't get their hands on a property. They would have, but they couldn't.
Sure.
So we know that wasn't comfortable. And so if a person is saying, well, I really, really want that financial spread, and I want the luxury of taking my time to find the perfect property and not having to rush my place to sale and blah, 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 blah. These two things, this is like oil and vinegar. They don't mix. So something's got to give. You either have to say, well, I'm going to, give here or give there. And I think where that conversation can lead with that type of seller is that, listen, let's just put math and time to the conversation. So let's just pretend that the gap that they thought they were going to have was at one time $500,000. Mm-hmm. And now the gap is $300,000. Okay. I think that would probably be a common story for the Fraser Valley. A person like this is probably well over 60 years of age, quite commonly over 60 and maybe even closer to 70. Their runway of what they have left in terms of home ownership is far different than the runway of a 30-year-old or a 40-year-old, right? Not that we like to talk morbidly about people dying, but it's just a fact. You're only, you only got so much runway left. And for this type of consumer, what's most important to them, what you'll often hear them saying is that I'm not moving for the sake of moving. I'm moving because this is my last move and I want it to be the right fit. It's got to be this type of rancher, this type of townhome. I want to have this. I don't want to have that. Like, they're very particular, right? These people have owned 3, 4, 5 homes in their lifetime, and they know what they want. So it's a similar argument. You stack these two things up and you say, listen, you're saying that it's really important. The reason you haven't transacted is because you don't have this $500,000 windfall. You've only got 3. But right now we know we can capture 3 and we can get you exactly what you want because there's increased inventory, or it's more likely to get you easier to get you exactly what you want because it's increased inventory. The question to ask is this $200,000, what is the difference that, this purported $200,000 that we're leaving on the table? What is the difference to that in your life over the course of the next 10 years, 15 years, as you live out your last runway here in your last property? And what I would suggest is that for some of these sellers who are then buyers, it's not as important as it sounds. Of course, that sounds like a lot of money and no one wants to throw that away, but it's fake money in that you never you never captured it. It doesn't exist. Mm-hmm. And I would suggest that what is in fact most important to these people is, or some of these people, is getting the exact property they need for their life moving forward.
Yep.
And so if you're able to, with story, because we like to use stories, remind them of the story from, say, 2021 and show them what a story looks like now versus transacting in 2021, and how successful the story can be today in comparison to what it was in 2021 in terms of landing the property they want.
Right.
That is what will bring people to a point of transacting today. And also keep in mind that those people are far less interest rate sensitive than the first time buyer or the move up buyer, because these people oftentimes have substantial equity, way more net worth, smaller mortgages on average in relation to the value of their property. And the difference between doing this with a 3% mortgage and a 4.5% mortgage,
it doesn't mean much.
It doesn't mean nearly as much to them. It does mean something because it sounds crappy, the media tells them it's crappy, and Brendan Ogmanson tells them it's crappy or whatever. I don't mean to pick on Brendan, but you know what I mean. But it's actually not. When you punch all the numbers out and you say, okay, here's what your life looks like in a what if scenario, it's not as significant. But we have to be able to have these conversations at this depth to get people to the point where they feel comfortable transacting.
Cool.
Make sense?
Yep. How did that lead into business planning?
Thank you, Justin.
I remembered.
I feel like I'm just do you want to talk at all? Do you want to say anything?
Yeah, I think you're doing a great job.
I've been talking all day. Okay, breath, and here we go.
We have business planning coming up. So how does this lead in?
So next week, Tuesday, Wednesday.
Yep.
2 sessions, same session, come twice if you want, because I promise it's value packed, and you can do it twice, and it's always different because you get different people in the room.
Different people.
Different questions are asked and whatever. But come at least once. And I sent out a personal invite today to our North Star agents who, we're trying
come on out,
trying to get them in and love them and bring them in. And
it's Surrey and Abbotsford. We hit everywhere.
Dan Corness, you responded right away to my email. Thank you for that.
I think Dan had already replied that he was coming too.
Yeah, Dan's the man.
Yep.
Dan's the man.
Surrey and Abbotsford coming next
Surrey
week.
Classroom, Abbotsford Classroom, make it a party. So to your question, how does this apply? Well, in the last few years, so I've done business planning sessions for a long time. Even before I was an owner, Ray had me doing these like in 2015, 16, 17. But since about 18, I've been doing them like regularly. And I would say, 18, 19, 20, 21, 22, maybe not so much 23, but like these were... Business planning's always got the same meat in it in terms of, we're talking about reflecting on what we've done, measuring what we've done, and then how to put systems and strategies in place to drive revenue, right? Like that is a business plan right there in a nutshell. You could just say, congratulations, we're done. But then in an environment where for those years, we didn't have to convince people to transact.
Sure.
We've been in an environment where it's cool and sexy to buy and sell real estate. So it was enough to say, okay, here's what fits me. Here's what I want to do. Here's the strategies I'm going to implement. And for the most part, we didn't get objections from the consumer as to why they shouldn't.
Sure.
In fact, the biggest objection we dealt with for 3 years was not consumer driven. It was the consumer couldn't find the damn property that they wanted to buy.
They could find it. They just couldn't get it.
We couldn't get it.
Yep.
That was the biggest problem. I mean, there would be people, if we had an audience here right now, they'd be nodding their head going, yes, it was brutal. I felt like I should have sold another 7 homes in 2021, but I couldn't find the property for the buyer. And there was lots of transactions that didn't occur as a result. So that was the context of business planning in that environment. And so we didn't need to bake into our business plan how to draw more water from the well. We can establish the revenue streams, but if there's only a cup of water flowing, but we need to figure out how to go to that well and get a cup and a half of water to flow or a liter to flow or whatever, that's a different conversation altogether. So we're going to talk about revenue streams. We're going to talk about a pipeline, which I've done before, but I haven't spent nearly as much time talking about what a pipeline is and how a pipeline actually drives and motivates all your activities in your business. I won't get into it more here because that can go down another long rabbit hole. And then we're going to do like case studies of the biggest challenges we're facing right now to get people to transact, and then overlay those case studies into these pipelines and say, oh, here's what it would look in this type of pipeline and that type of pipeline, and then develop strategies on how to get more of these people transacting in whatever pipeline we're talking about.
Mm-hmm.
So maybe one of your pipelines is you've got a business association where you're on Rotary, or you're on highly involved in a sports club and you're on a team, and you've got a lot of people in that sphere where you're accustomed to getting 4 transactions a year out of that pipeline, but last year you only got 1,
mm-hmm.
which would make sense because that's what's happened to the entire well of water, right, in our market. But there are things that we can do that create more transactions than if we do nothing, right? And so that's the extra layer to business planning this year that I think is relevant to this year because of the market we're in. So this is not just going to be, theory where we say, okay, everybody write down your goals and, what do you want to do? And like, okay, we're done business planning. We've all been to those kinds of sessions. Whatever. I'm not trying to attack anything, but those are very fluffy.
Yeah.
And I'm not saying there's no value in them, but this will be the opposite of that, whatever that is. This will be very practical, real life scenarios, actual strategies as to how we can think and talk our way through these challenges and show people how it's in their best interest today to transact. I'm not suggesting that everybody should transact right now. Like, there's nothing I detest more than the real estate industry at all times telling everybody now's the time to do everything.
Yeah. Mm-hmm.
That's not true. But what I can say for what I'm absolutely certain about is if we go through each month and there's, let's say, 1,000 transactions in the Fraser Valley Real Estate Board, I can guarantee you that there's another 100 or 150 that could have or should have happened. But the reason they didn't is because the professional who is involved in those situations lacked the skills, knowledge, and ability to help the consumer transact. And so as industry professionals and Little Oak and North Star stars in the marketplace, we're going to kick ass in 2025. And the way we're going to do it is we're going to be more and better equipped than many of our peers.
Cool.
And it starts with business planning.
Sweet. I'm looking forward to it. It's going to be good.
If that wasn't a sales pitch, then I don't know what was.
Yeah, seriously.
It's not a sales pitch. It's an invitation, and it's founded not in theory, but in fact. It's stuff that I've done and others around me have done. And it's all good. It's all good stuff that's totally applicable. So we want to help all of you sell as many homes as you possibly can in 2025. And the work in front of us is not easy. It's challenging right now, but it's in these markets that we make our greatest gains as professionals.
Cool.
So yeah.
Sweet. Tuesday and Wednesday.
Wednesday.
Yep.
Anything happening that else we need to talk about? We got Christmas party.
Christmas party's coming up. That's going to be fun.
Excited for that. That's Saturday.
Mm-hmm.
Yeah. I think we got a little over 100 people coming to that. That's pretty cool.
Yep. That's fun. I don't know if there's anything else going on.
Yeah.
I think it's pretty chill now till.
Well, we're getting ready for Christmas.
I know.
Everybody's Christmas shopping, wrapping presents.
Yeah.
I went to Costco last night.
Oof. I haven't been to Costco forever. I hate Costco.
Well, I hate Costco, but I love Costco at this time of year.
Oh.
So do you know what you got to do with Costco? If I can digress for a moment.
Yeah, tell me.
So, and my wife gets credit for this. I didn't come up with this idea, but my wife being the house organizing guru that she is, I mean, she doesn't go to Costco in the middle of the day. She's like, no, that's a recipe to kill someone.
Mm-hmm.
So we just go we walk in, I think it's open. The Abbotsford one that we go to is open till, I want to say 8:30.
8:30, yeah.
So what you do is you show up at 7:45.
Yeah.
Because they close the doors at 8. You can't get in after 8.
Oh, okay.
And then so we are the people that they're literally like. Have you ever seen how they herd you out of the store?
No.
Oh, it's remarkable. I experienced it last night.
Like when they close?
When they close, they herd you out of the store. So
that's funny.
if you imagine if you go and do Costco,
It's
probably
just like
a lot
start from the back and like
100%.
no way, really.
So, and that's probably, I would imagine that's how everybody like does Costco. They work their way in, they go to the back, they work their way back to the front. So you go down one side, come back the other. They had forklifts. Like I'm not joking. There was a crew. This would have been their night crew who was starting, right? Because the night crew starts at 8 and then they're restocking, organizing for the morning, right? If the over under was 40 workers, I'm taking the over. I think there was more than 40 people that showed up in a span of like 10 to 15 minutes, right around like 8:15, 8:20. And what they do is they start at the back of the store and they start clearing rows. They're going up and down them. And then the moment there's no more shoppers in the row, they actually rope them off. And then they're moving the forklifts they're hurting. They're literally hurting. And there's honking going on and whatever. And it is 100% designed
That's amazing.
to get people out of the store.
Yeah.
So we were almost the last people out of the store, but
it was probably quiet though.
It is quiet. There's nobody there. The lines were nothing at all. And so I love doing Costco Christmas time because I like to see the toys.
Oh yeah, there's so
even
much
though
stuff.
I don't, my kids are older now. We don't buy the toys, but like I want to check out all the Lego. I want to see all the stuff that's come out. I want to see the snow gear, whatever. And then the clothing. Like I'm totally a sucker for like a couple Costco clothing items every year. They always come out with like a winter kind of jacket that's got a hood to it. And if you were to go to like Mark's Workwear World and try to buy one, it's like $200. And you buy one at Costco, it's like 30 or something ridiculous. So there's that. There's like, whatever. We got some other stuff that we needed. I got this pair of winter, these like tight gloves that you wear under your snow glove. Like if you're skiing, you have like your glove, but then some gloves that you buy, they come with these things. So again, like, if you go and buy like whatever, the good ones from the ski shop, they're like $90 or more. And they had these like really good ones. And are they the top name brand? No, but
in the end, they're just covering your hands.
100%. And they're good. They're good. I've even read some reviews about them. $19.99. And like to replace them would be like $100 at another store or whatever. So I bought those to go in my stocking.
Did you? That's awesome.
Well, Santa's got to, Santa's got to take care of Santa.
Take care. Yeah, that's right.
Exactly. So,
well, that's good.
Anyways, Costco. Okay. Wrap it there.
Yeah. We'll see everybody at training next week.
Yeah. Thanks. See ya.